Hi, this is Michael Joyce with Agili, your personal CFO, and I'm pleased to share with you our thoughts and viewpoints in this very challenging time with the coronavirus crisis. Now, over my long career, I've been through many market downturns. I went through Black Monday on October 19th, 1987, where the stock market was down 25% in a day. I went through the tech bubble. I went through 9/11, I went through the financial crisis. And what was common in each one of those downturns was that a year later, the markets had recovered significantly, and in most cases was higher than it was before those big shocks to the economy. And 3 and 5 years later, they were significantly up. Now, where we are right now is we're going to have a recession. And it's going to be severe. In fact, we're probably in a recession already. But the way the government counts it, they're looking for 2 consecutive quarters of negative GDP growth. So we're going to get that. We're going to see unemployment levels that are at the highest levels since the Great Depression. It's going to be higher than the financial crisis. It's going to be higher than the previous high water mark in the recession of 1982. But unless the precautions, the stay-at-home orders, the shelter-in-place orders go on significantly longer, like maybe into the summer, the recession will probably be pretty short. So it's going to be very much unlike other recessions we've had. A lot of times in a recession, you get pent-up demand. And I think this is also going to be very different than other recessions. Typically in recessions, you get pent-up demand from deferred purchases of big-ticket items. So coming out of recessions, you see people buy cars, you see people buy boats, you see people buy houses and appliances and big screen TVs and things like that. I think this one's going to be very different. There's going to be a lot of pent-up demand to do something. There's going to be pent-up demand for travel. There's going to be pent-up demand for going to restaurants. There's going to be pent-up demand for going on cruises and the things that we're all deferring right now. So everywhere we look in the investment world, there are opportunities. There's opportunities in dividend-paying stocks, there's opportunities in bonds, and we're looking to take advantage of those. However, we're still going to have some bad news before this crisis is over. We're still going to have an increase in the number of coronavirus cases, we're going to have an increase in coronavirus deaths, and we're going to have, as I said before, a big increase, albeit temporary, in unemployment. So those are going to be kind of shocks to the system, and there's going to be big down days that are still going to occur. And we're looking to take advantage of that. We're not looking to spend all of our dry powder at one time. We're looking to take advantage of opportunities and maybe take advantage of some as this crisis continues to unfold. It's not going to be something that is going to be over by next week. So we are looking at various opportunities, and we're really happy that throughout 2019 and into early 2020, we did take advantage of opportunities on the other side when things were highly priced. We pruned a lot of positions when they were pretty fully valued, and now we have a lot of dry powder to work with, and that's really a good thing. The Federal Reserve has taken some steps in monetary policy, and there's been fiscal stimulus, which will also help, not so much ending the coronavirus crisis, but it will help the recovery when this is all over, when this crisis is all over and we start to recover from the downturn. And one of the big provisions with that you may or may not be aware of is that required minimum distributions have been waived for 2020. They did this once before in 2009, and they're doing it again. And that's good news. For those that have to take these required minimum distributions, you get to, if you don't need it for cash flow purposes, you can let your money continue to grow and take advantage of a rebound when that starts to occur. There's also other provisions in there, like for small businesses with the so-called Paycheck Protection Program, where the government is working with banks to increase stimulus into the economy, and that will certainly help the economy when it does start to recover. So there's a lot of things going on right now. So I think it's really important to be in touch with your financial strategist at Agili, and we can help you through these very challenging times, through this crisis, and optimize your long-term financial position. If you do have any questions, feel free to contact me, to contact your financial strategist, or to follow us on social media. You can follow us on LinkedIn, you can look at our website, you can also follow us on Twitter. Thanks a lot. Have a great day.